Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day. Jennifer is grateful for the opportunity to educate, empower, and inspire you with powerful conversations, insights, and new viewpoints. Here's your host, Jennifer J. Hammond.
This is Jennifer Hammond, and I'm so excited. I know you're going to think I'm crazy. Oh my gosh, we're going to talk about a subject that you're thinking, why would you ever be excited about this? Well, I love talking about things that help you make money, whether it's in real estate or guess what? One thing that many people don't think about is their taxes, and not to be afraid of them, because so often things that we don't really understand, we have a tendency to back off. So my next guest, David Bradley. He's a CPA. He has, there's over 14 million taxpayers. Let me see. David, let me tell you about David, first of all, and then we'll go into some of the things. David has been a CPA since 1997. He has extensive experience representing hundreds of taxpayers before the IRS and being able to take complicated tax issues and solving them for his client. Less than 5% of CPAs have the specialized knowledge of how to combat the most ruthless collection agency on the planet that has almost unlimited powers to garnish wages, levy bank accounts, and seize assets without a court order. And of course, what he's talking about is the IRS. So welcome to the show, David.
Hey, how are you, Jennifer?
I'm great. I'm so excited to talk taxes because, again, this is an area that so often is overlooked. And I think for most business owners, especially entrepreneurs, it just becomes very daunting. Oh, what can you do? What can you not do? And so I think it's so important to really take it on and let's look at it. So let's dive right in with delinquent returns. What would you do? And I hate if someone's listening, but they might be listening and kind of in a bit of shame and thinking about if they have delinquent tax returns, what can you do about that?
Yeah, so most of my clients have delinquent tax returns. So some people they haven't filed in 25 years, they haven't filed in 2 years, whatever the case may be. And there's what's called tax anxiety disorder. That's a real disorder that it starts out with procrastinate or things happen in life. And so we have to go back and file the return. So everybody becomes afraid of the IRS, whether they owe too much money, they can't pay, or they're going to go to jail, God forbid. That's not going to happen. So what we do is we go back and we get what's called a wage and income transcript from the IRS. Because the first thing I do when I have to go back and look at multiple years, I want to know what the IRS knows about my client. Okay, so it's called a wage and income transcript, and I want to see an unredacted form that shows all the W-2s, the 1099s, any interest statements, anything that's mortgage interest you paid. So that's my basis of my tax return, because I'm not going to try to have my client remember every single thing, and then we file a return that gets rejected. So it's pretty simple to go back and do it. I do it every day. But it's very stressful for the client. They think it's going to take a long time, and I'm able to minimize that substantially.
Well, and I think that's really important, is to have a place to start. And I think it's really important to know that even if you have delinquent tax returns, there is a way back. And so often that just seems so scary. As you said, people have a lot of anxiety about this. So what would you just say to someone if they're listening right now and they are somebody who has 1, 2, or multiple years of delinquent tax returns? What should they do?
Well, 90% of the battle is making the phone call.
Yeah.
Because once I get it, I had a lady in my office yesterday, brand new client, and they'd heard me on the radio. I was being interviewed on a show I'm interviewed on quite frequently. And she started crying in my conference room, and I said, stop crying, because I said, you've basically given me all your problems. I'm handling it now. So there's no reason to cry. I said, and I solved the problem within 24 hours, and she even for months. But it's the knowledge, knowing what to do. Yep. And I always tell my clients, the first thing I am is a therapist.
Yeah.
I want you to calm down, relax, because I need your state of mind to be focused. Because the IRS doesn't want to put you in jail. There's never too much tax that you can't afford to pay, because if you can't afford to pay it, you don't have to pay it because you can't pay it, right? So they can't put you in debtor's prison. So we work off what's called a statute of limitations. That means they only have 10 years to collect. So I have a guy that owes $2.5 million, and he makes $85,000 a year. How do you get it? Just parlayed? He made a lot of money in the past. It parlayed. So all we're doing is letting it fall off after the 10-year statute. I set him up on a $1,000 a month payment for $2.5 million, and this stuff he'll never be able to pay it all. So as it reaches the 10-year statute, it falls off. And so he doesn't owe it anymore.
Wow.
Instead of doing the offer and compromise where you hear on the radio, pennies on the dollar and those type of things, this is my strategy of pennies on the dollar, is waiting the statute of limitations out instead of filing an offer with the IRS to reduce the taxes that I owe, because you'll still end up making those payments you would have made. See, once you file an offer and compromise to get it approved, you have to stay in probation for 5 years. If you make one mistake in a 5-year period after you get that approval of reducing that tax liability down, you make one mistake, they will reverse everything back to where it was.
Wow.
You don't want to be a reoffender under the offer and compromise program. So I rarely use that program because I don't want my clients to be susceptible to that.
Yeah, I think it's really important, again, understanding the rules of any game. And I use Monopoly just as an analogy, and that when you know the rules of the game, you can win the game. If you don't know the rules, you're never, ever going to have a chance of ever winning the game. So what can you do to do that? So number one, I always think the thing you need to do is put together, I call it your yay team. And one of those people I think is your CPA, your tax expert, that's going to help you. And I think so often, you know, and maybe just because in America, we so much are so proud of doing things on our own, and we forget that we need a team. You know, I am not a tax person. I can't be an expert in tax. So I need someone like you. I need someone who will help me. The same thing with legal stuff. I need an attorney, and there are all sorts of different kinds of attorneys. The same thing with the doctor. I need a doctor, you know, and no matter what you do, it's really important that, again, you are finding a way to have the experts help you. And I know, speaking of that, will you tell a story of someone that had delinquent tax returns and how you helped them? I mean, somebody who had like a lot similar to the guy who had the $2.5 million, but another person who just thought there was no hope whatsoever, and you helped him?
Well, everybody that comes in, they feel there's no hope, I can tell you. And so I go, it doesn't make any big deal. It's not any big deal. So I had a father, a single father, who had 2 kids, and he had a wage levy. So he came to me, and when they do a wage levy at your employer, they take 90% of your check. Okay. So they're forcing you to the surface, basically, is what they're doing. They're just cut off all your air, force you to the surface. And so they come to me on a levy. So I get the wage levy lifted that day. He owes $250,000 in back taxes for 1 year that was way back. And he actually was convicted of a white collar crime. And so he was required to pay the court $750 a month. He could no longer pay that. Otherwise he goes back to jail. That's the premise of this specific circumstance. So I lifted the wage levy immediately that day. And then he had a year and a half left on that statute of limitations we're talking about for that $250,000 to fall off. And I said, we lay low, and we hang tight, and we leave everything alone and move on, make a small payment of $100 a month, set that up. And then so that fell off. So he no longer owes the money. He has a clean slate, single father with a 13-year-old and a 14-year-old sons. And those are the kind of people that I enjoy helping, because that made a huge difference in his life, kept him from going to jail. Where would his children go? So those are the kind of stories that I deal with every week. There's always a story. And I'm David and Goliath. I am David all day long with a slingshot. And I have no fear, and I go in and clean up messes every single day.
Well, and David and Goliath is a great comparison, because again, the IRS feels so big, and because a lot of us don't understand all the IRS rules, and they constantly change. Yeah, so it's also, you have to keep up on them. I mean, I think that's also part of the thing when I first got out of college, you know, for some bizarre reason, I had the idea I would just do my own taxes. And then I quickly was like, wait a minute, they keep changing the rules.
Yeah.
But you guys, you do things to keep up on it. Would you share, how do you guys keep up on all the new tax laws?
Well, so I'm a tax planner as well. So I have specialty and I have software for that. So our software keeps up with those type of things, and we're having to read. I'm sitting there yesterday, was reading all the new potential tax differences coming out under President Biden, because he's doing a lot of changes, making a lot of changes, and how is that going to affect you going forward? And how do we make those adjustments? So, you know, everybody says taxes are going to go up. So how do you account for that? So
Right.
it's job security for me, I guess, to a certain extent, but it becomes overwhelming at some point in time because but I do have software that keeps me straight, so we can key in and answer certain questions, and then it gives us scenarios. Very sophisticated software that will help. I'm telling you, most CPAs do not do adequate tax planning for their client. You think a CPA, I have a CPA, so I should be getting the best advice. Unfortunately, I see that all the time with new clients. Like a doctor client that I just was going to take on here on Monday, this coming Monday, doing a tax planning presentation, structure completely wrong and probably paying an extra $20,000, $30,000 a year for no reason. So that's opportunity for me to come in and create value for a client and to protect them from the IRS as well with strategies that I can defend.
And I think it's really important to, again, know that you need an expert on your team. But also, you mentioned all the the changes, even the changes that are happening with the Biden administration that he's coming in. And I know a question that a lot of people have asked is, they got these stimulus payments. So are they going to have to pay taxes on the stimulus payments?
Yeah, that's an interesting thing. So the stimulus was based on either they were looking at your 18 or 19 tax returns to determine if you could possibly qualify. So if you had made below those certain thresholds for single or married filing jointly or separately, that is not considered, that's a credit. So that is not considered a taxable distribution from the IRS. So there's no tax on it. Now the next question is when you file your 2020 return, that's when if you did not receive a stimulus payment, didn't file an 18 or a 19 return, and you had not received your $1,200 or your $600 on the second round, you can get that $1,800 credit on your 2020 tax return. So a lot of people have not received it, and they should have received it, or maybe they didn't have to file a return. So the 2020 return determines that. Even now, let's say in the 2020 return you made more money than the thresholds allowed, so you don't have to pay it back, which is good, because that was the concern. The clarity is, am I going to have to pay that $1,200 back if I made more money in 2020 than I did in 19, which they base the distribution on? And the answer is no. If you end up making more than the threshold and you received it early, and you technically were not allowed to receive it because you made too much money, you do not have to pay that back. And I noticed that on the system, and I go, great, because that's important, because we're doing 2020 returns. Actually, you can't even file the 2020 till February 12th. We're doing this in January, this conversation, but yeah, so the stimulus is not taxable, and you do not have to pay it back if your income in 2020 is higher above the threshold.
Yeah, that's going to be something I think a lot of people are going to ask about. So it's really important. And since I'm asking those questions of, this pandemic year 2020, when things were so crazy, what about unemployment compensation? How is that going to be affected as we go forward with the President Biden's administration?
Yeah, because unemployment compensation is taxable, and they usually don't take taxes out at the state level. So there are going to be some people that are going to run into issues where they spent that money and then it's taxable. Now, of course, if they only received unemployment compensation, their standard deduction and other things can reduce that as well, and not have to pay any tax. It may not be taxable at all. It just depends on the individual circumstance, but that is a taxable, that's taxable income, just like wages are.
Well, that's something, again, as you just said, I think is going to be a surprise to a lot of people because they weren't planning on it, and maybe they'd never gotten unemployment before, and this was the first time. And so that's something new that they're going to have to think about and try to kind of go through it. So this, if they've never done it before, I think this is the year you should be talking to a CPA, an IRS, you call it the IRS doctor. This is David C. Bradley. And of course, we always put up all your information. So wherever you're listening to this podcast, you can find David's information. And I'm sure that you call people and you're happy to just have a conversation with them, right?
Yeah, so they can call for a free consultation, because sometimes I'll have people upload information. I give them the portal. So I want to see what the IRS is stating and see if it's something I can just tell them, look, all you need to do is this, and I don't charge them. I try to be fair with people. If it looks like something that needs a little more heavy lifting, then I'll say, look, this is something that I could do a better job of, I think, and keep you out of trouble. And this would be my fee. And so that's how I handle it. So people can call me and ask questions, and I do provide free information to people from a simplistic standpoint if it's not that complicated.
So I have one final question I want to ask, because I know we're almost out of time, but I know this is a question that a lot of people ask about audits. It's so interesting when people get an audit, they really are, they're afraid. And of course, they start to just get into this, again, that anxiety that just washes over people when there's an audit. But when they have an audit, should they consider an appeal if they disagree with whatever the findings are at the end of the audit?
Yeah, so 97% of all examinations are never appealed. So 3% are appealed. I'm the 3%er kind of guy. I like to go in, because if I don't think that we got a fair shake, I'm going to appeal. So what happens is, once your examiner and you provided everything to the examination officer and they issue their report, they say you owe this, then you have 30 days in which to file for an appeal. So now you get an appeals officer. And then if that doesn't work out, where you're still not getting restitution at that level, they issue what's called a notice of deficiency, an NOD. Then you have 90 days in which to file a petition in tax court. And I've done a lot of tax court cases and won every one of them, just because there's a lot of intimidation, there's a lot of bluffing, and I go and find tax court cases and precedents. We're not going to go in and file a petition unless we feel we can win and we have document. There's no reason to go down that road. But you do get a lot more bang for your buck when you go into tax court, believe it or not, and you're able to negotiate those penalties off. And we've had some really good outcomes in tax court.
And I think it's really important is, again, to even know that it's possible, because I probably should have asked the question first is, can you appeal an audit? Because I think, as you showed by the 97% of people never appeal it, I would guarantee that at least some of those, if not a big majority of them, don't even realize that they can appeal it, and have probably never even explored it, because again, the anxiety, the emotion, the time consuming, all of that was probably so frustrating that they didn't know that they could appeal their audit.
Yeah, and I always let the examiner know up front that I usually appeal my audit findings. So I always let them know up front that it's nothing personal, but it is something I look very closely at, and I want to make sure that my client is treated fairly, not to be adversarial, but to let them know I am one of the 3%ers.
Yeah, I think that's very special, is to know that you are somebody who's going to continue to fight for what's right no matter what. And again, the David and Goliath image in my head, it just rings true. So David Bradley, thank you for all that you do in fighting for what's right in taxes and the whole arena of taxes, which feels a little bit like it can be a bloody battleground sometimes, and very confusing for me.